Hi guys, welcome back to the channel, the Daily Forex. So in today's video I'm going to share with you guys how to trade boom and crash indices with a very powerful strategy that you can use to make profits on this market. All right, so first and foremost I'm going to share with you guys the parameters for these indicators that I use to be able to see a very good opportunity to place a buy or a sell entry. Okay, you're going to like the strategy. So first and foremost, we're going to go over to the indicator section. On the main window, you put on the moving average on period 12, shift 0, method exponential right here. Then you apply to close. The style, you put that on 2 pixel with the color purple right there with this first trend line pattern. Then you click on done to take you back to the main chart. Okay, now the moving average, this is how it's going to look on your chart. Okay, then you put in the relative strength index on indicator window 1, period 14, you apply to close. Then for the levels, you add 10, 100 and 50. Okay, for on the description, right? Then the style, you put that on 3 pixels color black with this middle line. Okay, then when you're done with that, you click on done. Then on the main window right here, on the main parameters for the relative strength index, you put on the style on 1 pixel with color white. Okay, this is the first page of the relative strength index. All right, put the color white right here. Then you click on done. So this is going to be on all time frames. You click on done to that. All right, then we put on the envelopes. Okay, now the reason I'm showing you these parameters like this is because of the new guys who are new to trading this type of indices, and they don't know how to set this up properly. All right, for the period, put on 70. Okay, 70 period, shift, you put 0. Deviation is going to be 0.950. the method simple. Okay, you put on simple, then you apply to close. You do not add any levels for this point. Then the upper band is going to be on color blue on 2 pixel with this first red line. Then the lower band is going to be 2 pixel color red. Okay, then you click on done. All right, as you can see at this point, now we're going to put the moving average again, right, on indicator window 1. This time the parameters for the moving average on the indicator window 1 is going to be different from the one on the main window. Okay, on indicator window 1, moving average, period 1, shift 0, method exponential, you apply to close. The style, you put that on 2 pixels with purple color with this first trend line. Then you click on done. Okay, now we have a moving average on the main chart right here, and we also have the moving average on indicator main window 1 here. Okay, on the the indicator section at this point in time. Now what we're going to do right here is that this strategy actually works. We're going to be using this strategy to catch spikes and take over 5 candlesticks. Okay, 4, 5 to 10 candlesticks with this strategy as well. Now you can see that at this point right here there was a spike, right, a very big sell in price movement on the 1 minute time frame. We know that the 1 minute time frame moves quickly than the other higher time frames. So if we go to the 30-minute time frame, and if we zoom in a little bit, you can see that currently this market is going towards this trend line, going towards forward like this, right, and is selling. Now what we're going to do right here is to zoom out a little bit from this market. Okay, now I've zoomed out a little bit from this market, as you can see right now, right. Okay, now we can see that this market bought up to this point, right, and it has been buying for a very long period of time. Now this market is going to sell, so we're going to be expecting multiple spikes on this market because the market is going towards the downward trend. So we're going to be expecting multiple sell entries on this type of market, right. Now the reason I went over to this 30-minute time frame is to do a proper analysis to see that okay, this market is going towards the downward trend because it has already got into the overbought, right. Now we'll go back to the 1 minute time frame and we're going to observe. Okay, now you can see here the market spiked at this very point, and if you trace it downwards, you can see that this line, which is the moving average, when it gets to this upper band of the envelope, okay, the upper band of the envelope, which is, you know, this blue line, when it gets to that point, the market would sell. All right, when you notice that it's gotten to this point, the market is going to sell. Now you may look right now that this moving average, there's a space here, right? But basically how this work is that when this, if I go back right here, you can see here it touches this upper bound, right? But immediately it touches this point, that is when you enter into the market for a sell entry. Okay, you look for a good opportunity at that very point. But when the chart started going towards the right hand side, you will notice that this moving average will start to go down. So what this means is that immediately you see that first touch or cross above the upper band, you enter into the market for a sell entry and look to cash that spike at that very point in that market. Okay, now you can see that at this very point there was a spike here, it dropped down again, and the market buy for a very little bit and it dropped. Now how do you see a buy opportunity? You wait until the moving average crosses below the lower band of the envelopes. Immediately crosses the lower band or touch the lower band, you enter into the market for 5 to 10 candlesticks. For me, I'm going to take 5 candlesticks, so that will be, you know, really safe on the market. Okay, you take 5 candlesticks, then you wait again for another opportunity, right? Now this is the reason I said you should wait for 5 candlesticks. Now take a look at this point here. Now let's take it a little bit. You can see that at this very point it's almost at this level of the lower band. At this very point you place your buy for 5 candlesticks. Okay, you place your buy for 5 candlesticks at that very point. When it touches, or when it's almost at that very point, then you place, you know, your buy and take, you know, 5 candlesticks. And it's even much, you know, good when it crosses below the lower band of the envelope. Okay, the lower band of the envelope, you can see at this point right here, it crosses below this point, you immediately, you know, place your buy, take 5 candlesticks from that point. So using this strategy, you know, over and over again, for, you know, looking for a good opportunity where you'll be able to place either a buy or a sell on the crash market, you're going to be able to, you know, make profit, and, you know, also try to grow your small account as well. And remember that you need to be patient with this type of strategy. Okay, now what I'll do right here is to go over to the, now you can see that we have successfully gotten 5 candlesticks from this point, then you exit. Okay, this is 5. All right, now what we'll do is to go over to Boom 1000 index. I'm going to show you how you can also use the same strategy on Boom market. Okay, remember that I told you guys we're going to be doing this on the boom and crash market. All right, now we're expecting a spike at this point because this moving average have touched this, you know, lower band of the envelope. So basically this is like, you know, you are trading this the opposite direction. Okay, at this point this is whereby you place your buy. If we go over to the 30-minute time frame just to check, let's observe. Now when you're trading this type of, you know, market, you want to make sure that you add, you know, price action to it so that you can know when best to place that buy or sell. If you take a look at this point, this market is currently going towards the downward trend. So we're seeing that this market is going to be selling for a very long period of time. It's going to sell and buy, but the buys that are going to come into the market is going to be very small buys. Okay, and this is the 30-minute time frame right now. The market have been selling. You can see that we took 1, 2, 3, 4, 5 candles on the 30-minute time frame before it spiked for a buy. It took 2, then there was a little buy. Now what do you expect again? It's going to sell a little bit, a little buy, sell a little bit, a little buy. Okay, so that's what you're going to expect in this type of market. Where the price is also matters as well in this type of strategy. Okay, now at this very point, you can see that at this very point right now, we're expecting this market to buy. I'm gonna place a buy at that very point. Okay, we're expecting that spike to come into this market. Then at this very point here, immediately it crosses above the upper band, you place your sell. Take 5 candlesticks, 4, 5 to 10, but I'm gonna take 5. All right, then you look for that opportunity. You take 5 candlesticks from that point in time. You take 5 candlesticks. You can see. All right, very perfect strategy for you to make profits and also try and grow your small account using the moving average, or using double, one on the main window and one on the indicator window. One, we used the relative strength index and the envelope. Okay, as you can see right here, we just caught the spike at this very point in time. Look at it, I told you guys when it gets to that point there's going to be a spike, right? And we just made that profit from that point in time. Okay, so if you found value in this video, do it to like and subscribe to the channel, the Daily Forex, and also join our Telegram community, the Daily Forex as well. All right, I'll see you guys on the next video.